Welcome, everybody, to the very first edition of the RPAG Scoop, your monthly video newsletter where we give you the latest and greatest in the world of retirement planning. I'm Ashley Passo, the marketing coordinator for RPAG, and I'll be your guide for you on this exciting journey today. So we have an incredible lineup for you for this edition, packed with insightful segments and industry experts who are here to share their knowledge with you. So grab a cup of coffee, settle in, and get ready for an exhilarating ride. Kicking off our newsletter is our very own Jesse Taylor, the dynamic force behind our business development team. Jesse will be bringing you the exclusive What's New at RPAG segment, where he'll reveal the exciting developments and updates that are shaping the future of our organization. Believe me when I say you don't want to miss this. Next up, we will have the investment update featuring none other than our brilliant Chief Investment Officer, Jeff Elvander. Jeff will dive deep into the investment world, dissecting market trends and providing you with valuable insights that you can use to elevate your investment strategies and make more informed decisions. Following Jeff, we will have our friends at The Standard who will be sharing their wisdom in retirement plan basics. They have been a trusted partner in retirement planning space for years, and today they will present some great solutions that they have to offer, including PEP Connect. Whether you're just starting your retirement journey or you're a seasoned planner, you will find their insights incredibly valuable. And last but not least, we have a special feature from the renowned experts at Capital Group. They have graciously bestowed their knowledge upon us, sharing insights into the powerful 70-30 rule. If you want to discover how to strike the perfect balance between growth and stability in your investment portfolio, this segment is an absolute must-watch. With all these incredible segments lined up, the RPAG Scoop is your gateway to staying ahead of the game in your planning strategies. We're here to provide you with the knowledge, guidance, and inspiration you need to take your business to the next level. Thank you for joining us, and remember, the power to boost your business goals starts right here.
Hello, and welcome to the June edition of the RPAG Scoop. My name is Jesse Taylor, Vice President Business Development for RPAG, and I have the pleasure of bringing you the RPAG update. So first, we're going to talk a little bit about what is new at RPAG and how to access some of the great resources that you have available through your RPAG membership. First, I want to talk about how to stay up to date on all things RPAG. As you're probably aware, we have rolled out a great new public-facing website at rpag.com. Lots of great pages and interactions and content, videos, great descriptions of all the services that you have access to, or maybe services you didn't even know about. And one of the great things to do is our insights page. So I know I have my fancy virtual background here. Use finger. Go to the About tab, drop down to Insights, and that is the RPAG blog. There is all sorts of great content, resources, and updates on that. It's somewhat new. You may have seen an old version of it, but the RPAG Insights blog is the place to go for everything RPAG. There are RPAG updates like the Retirement, which is our weekly e-newsletter that has all of our webinars, content, resources, and upcoming events. If you're not getting those retirement emails, please contact support@rpag.com. We'll make sure that we get you on the distribution list for that, or you can check out the links to it on the RPAG Updates blog. There's also the tech enhancements. So one of the questions that we often get is, hey, you guys have so much great technology. How do I stay on top of all the updates and resources that you do? But we put out a tech production push every 2 weeks, and we do a tech enhancements post every 2 weeks. So you're going to see all the bug fixes, updates, enhancements, and new systems and resources that we roll out through our technology production pushes, and you can get those enhancements on the blog. And then third, a great resource on the blog is our content. So these are our participant corners, retirement times articles, newsletter updates, all sorts of great content that you can take to get educated, or you can even send those links along to your prospects, your clients, and participants. A lot of great content there on the blog. Most of the content that we push out there also has a white label version on the RPAG Resource Center. So it's just a duplication of that, but it'll give you good awareness on what is available to you. So check out the RPAG Insights blog page when you get the chance at rpag.com. Something else that just launched on the Insights blog page are recordings from the RPAG Spring Summit, specifically the red flag sales sessions. Red flag sales process is something that we follow here at RPAG. We like to preach it to our members. A lot of you do it innately, and this codifies that process of being successful in your prospecting and your selling and your consulting. And the recordings from our spring summits that we just held in 4 cities across the country in April. And on day 2, we had a lot of great sessions on sales. 5 of these red flag sales sessions. The recordings and the description of those sessions are on the Insights blog. You can check out those videos and watch those sessions. If you are at the summits and you just need a recap on a tip or a trick that you learned there, or if you weren't able to attend one of the spring summits, you can check out the recordings here. Really, really fantastic, and codifies the sales process. So it's not just the overarching overview of the approach to sales, but there's the 4 separate quadrants of red flags. So building that strong process for your sales and your prospecting, uncovering the truths and uncovering areas of concern with clients and prospects. Art of closing the deal, that's a 3rd quadrant, and then unveiling secrets of client satisfaction. So these are the titles of those 4 sessions on the blog. You can check out those videos. This will kind of help you when you're looking at a holistic sales and marketing plan and looking to grow your business. Next, I wanted to give an update on our Plan Fees RFP Express tool. RFP Express is our latest and greatest RPAG system that we've rolled out this year. It's only about 2 months old. It is a streamlined RFP system, as the name implies. It's RFP Express. It has the ease of timing of our Plan Fees fee benchmarking tool and the apples to apples RFP format of the provider analysis, or you may still know it as the B3 provider analysis. The RFP Express takes that ease of use, takes that process, has a nice middle ground, is great in the sales and marketing process, great for smaller clients. It streamlines the process. So instead of having the system or you reaching out manually for proposals and quotes and putting it together manually and spending a lot of time putting together the analysis, it streamlines the whole RFP process from tip to tail, utilizing instant quotes from top providers. If you've ever shopped for a car on TrueCar, it's a very similar experience as that. It's going to give you a really great indicator of what the competitive pricing is going to be at many of these top providers. The providers build their pricing into the back end of our tool. We work with all the top providers on this to have a really safe, secure, and accurate process. And if the instant quoting and the investment lineup use there isn't quite to your need, there's the custom quote that you can go and reach out to those providers and get that back. And it's really quick, usually within 1 business day or so. It's perfect for small clients. Most of the providers who provide instant quotes go up to about 5 million, some of them much higher than that. So you can even have success over that. But we've seen some fairly large plans. You can get custom quotes well over $10 million on this. Ultimately, it's going to save you time in the RFP process and the sales process from doing it the traditional way, or even using our more in-depth tool, the provider analysis, which still is out there, still great for your larger clients or your existing clients who want that 400 and 500 point really precise analysis. Provider analysis is still there. But if you're looking to save time in that process, RFP Express is a really great alternative to that. Here's some of our great providers that are on RFP Express. American Funds, Nationwide, Empower, Ascensus, Fidelity, T. Rowe Price, One America, The Standard, Voya, Paychex, and I'm blocking Vestwell over here. Those are the providers who are providing instant quotes today. More and more providers are getting on the instant quoting each and every month. And by the end of the year, we'll have all of our top providers on there. There's also providers who are just providing custom quotes at this time. So they're still on the tool. That's Ameritas, Charles Schwab, CUNA Mutual, Principal, and Transamerica. More and more are coming on board. We're working really hard with all of our great service provider partners to give you a great experience on RP Express. If you're looking to learn more about RP Express, how to utilize it, maybe add it to your package, contact support@rpag.com. We'll get you signed up for it, get you or a demo if you need to take a look at it. It's a really, really great tool. I know there's a lot of videos and resources out on the Resource Center today on it, but it's been really exciting. I believe we've just passed the 1,000 proposal threshold in just under 3 months. So very, very exciting. Next, I want to give a sneak peek at one of our newest partnerships. You'll see an email announcement, a webinar coming up for later this month, but we have partnered with Venrollment. And Venrollment, if you're not familiar with them, is a video enrollment, as the name implies, video enrollment tool and technology. It is a great tool that streamlines the process of creating videos for participant enrollment and education. It customizes those videos to that plan with their colors, logos, plan features, and eligibility features by just utilizing a couple great data points. Really, really cool, slick software. We've done a lot of vetting of it here at RPAG. It helps you in the sales process and the consulting process. Very, very popular. And we've had a lot of advisors ask RPAG and said, hey, can you guys build a partnership with them? And that's what we've done. Really great folks at Venrollment. They want to work with advisors like you to help streamline your process when it comes to enrollment and education, and even the sales and marketing process with plan sponsors. We have negotiated some industry best pricing for RPAG members. This is a premium service that you can add to your RPAG account through RPAG. You don't have to go out to Venrollment and have a contract with them. Essentially, it's redistributed through RPAG. You call in to RPAG, we'll help facilitate a demo and some information. And when you sign up, it adds onto your RPAG bill. We provide it starts up to 50 plans at $3,600 per year. It's a 20% discount off retail pricing, and there's breakpoints as you grow and you add more clients. There's 100 plan, 150, 200, which doesn't even exist in retail, but we know a lot of you members have significant books of business, so we've worked that out with them. So really, really great service, really cool. You're gonna be hearing a lot more of that on announcements and webinars, and we're excited to work with Venrollment and create some successful results for you and your sales and your consulting and your employee engagement. But really excited about this resource and excited to roll it out to you. So look out for more information on the Venrollment and RPAG partnership and how to add that to your account. And that is it for today's RPAG Scoop for the RPAG update. And I hope to see you soon, and stay cool out there for the summer. Take care.
Welcome everyone to our investment chip scoop, where we'll cover some of the market returns, what we're seeing quarter to date, along with some updates, what we're doing on the investment side in the system. So let's first start out with a market update. And this is through 6/6. And for the quarter, what we've seen in the equity markets is really some strong performance. The broad U.S. equity markets are up 400 basis points since quarter end. So now that puts our year-to-date numbers for U.S. equities at almost 12%. And really where this is being driven from is tech. So if you look at really every other area of the market, not doing great. But when you carve out tech, very strong performance. And in fact, you can say they have been leading the way here. And you can see that here year to date, the Russell 1000 growth comprised primarily of large tech companies, the FANG stocks, Facebook, Netflix, Amazon, Google, and Apple, up almost 24%. So maybe what we're seeing here is tech got hit a little harder than they should have, and people are starting to see some value in tech and come back into tech. And that may be part of the reason driving some performance there. So U.S. equity market performance solid so far for this quarter, some good year-to-date numbers. In the international markets, a little different. Those markets are really up modestly since quarter end. For the year, though, we had some good performance in the first quarter. For the year, that puts us at a little over 8%. And then what are we seeing in the fixed income markets? Well, for the quarter, rates have been increasing slightly. And what that does is that results in a negative total return for the quarter. And that's brought our year-to-date returns down somewhat on the broad fixed income markets, putting them at about 2.3%. So still positive for the year, but not by a lot. So that's what we're seeing across the markets. For the quarter notes that I have here, wanted to cover the tail of Chicken Little, because that's what it really felt like to me. Over the quarter, there's a lot of talk about the debt ceiling, which now I think has been resolved. Certainly that took center stage in terms of can they get something passed? Will they raise it? What's going to happen if it doesn't? And we've really been through this story time and time again. And what happens, there's some good charts out here. I didn't grab one to show everyone, but it's essentially a chart of the debt ceiling that shows every time the debt ceiling expires or needs to be raised, it is raised. And certainly Congress and the president have a lot of tools at their disposal in the interim, if it is not raised, in terms of how to pay bills and address those concerns. And so, that certainly, after looking at the market performance, I don't think, even though it may be a sky is falling type of thing, and all the negative consequences that could come if it was not hiked, really did not come home to roost. And so the parallel, and I wanted to, really now finish with the coming recession and what we're seeing there, or what we're hearing there, is there's been a lot of talk about that as well. And certainly that started at last year, and certainly at the end of last year, saying the recession would be in 2023. And, I think we'll start to hear more about this. I am not so sure that a recession will hit in 2023. Certainly when you look at all the hard data, and again, this is the tale of Chicken Little, right? Chicken Little felt an acorn drop on its head and started really crying out to everyone that the sky is falling. Really, I think there needs to be a little more hard evidence out there in terms of a recession on the horizon. And right now, all of the data points that we're looking at do not portend a recession anytime soon. I will guarantee you one thing, though, a recession is coming. We just don't know when that will be. A lot of pundits are putting it down to 2024. So again, the market's very strong, even with a lot of this news that's been out there. So that's the good news. I'd like to finish it up with what we have now programmed into the system. Having some fun with this Ask Mint chip here. So any questions that we're hearing, would like to, address those, or new things that we've developed. And one of the new things that you'll find in our system is what we're calling the strategy equivalent. And this is something where now, really, what is it? It's a proxy fund, a fund that we've identified to use in the due diligence process for certain funds that are not scored. And, why do we have it? Last year, in November of 2022, the SEC came out with some new regulations regarding linking fund performance. Historically, we had linked fund performance to an older share class, another strategy, a mutual fund, for instance, if we were evaluating some new CITs. A lot of the regulations now coming out at the end of last year really now are preventing that linking of performance, sort of looking at it as hypothetical. And so that's why we have a strategy equivalent now being tagged for certain funds or strategies that do not have a 5-year time history, or if they do have a 5-year time history, if there are two managers that are representative of that performance record, the strategy equivalent is being used in that case, so you can evaluate the current manager's track record over the last 5 years. So you don't really have that blend of performance that is not going to be helpful in the due diligence process. So we added this at the end of last year, and it is not only in the scorecard, it's also in the returns analysis. The last bullet point here, how do I use it in reports? We feel that it's very important to have this in the due diligence process. This is really what we should be looking at. Again, in the due diligence process, we're evaluating the manager and the manager's strategy, less so a specific share class or a specific fund. Again, we're trying to identify manager skill for the active managers, manager skill on the asset allocation side, and then also tracking on the index and passive side, which again is manager skill. So very important. So in most cases, it is going to populate automatically. It will be the default. There will be some optionality around it to include it if you do or if you don't in some of the other reports. But over the coming weeks and months, it is really going to populate throughout the system where you'll be able to see it across a broad array of reports. And so that is the investment scoop. And we'll see everyone next time. Thanks.
Hi, my name is John Erickson. Today, you're going to hear from Standard's business development team about what our amazing organization has been up to recently. Here at the Standard, every decision we make is about serving you, our advisors, third-party administrators, and clients. With the acquisition of Securing Financial's record-keeping business, we're able to bring together two award-winning service-focused retirement plan providers. We have enhanced our product offerings and expanded relationships with distribution partners. In other words, we become better together. That means better products and services for you, and it's time for you to experience the best of both organizations.
Hi, my name is Iket Shaligo, and as John shared, now that we've put the final touches on some of our newest offerings, we are excited to give you, our partners, a first look. This is the first of many enhancements we'll tell you about in the coming months. The Standard has chosen to adopt the practice of benefiting plan participants from foreign tax credits on the group annuity platform, while always using most efficient share class and crediting all revenue sharing back to participants. Foreign tax credits apply to certain separate accounts that earn tax credits from foreign securities that the Standard will now refund back. We're adopting this practice from our legacy Securian team members, who have returned $3.5 million in foreign tax credits in 2021 alone, directly benefiting plan participants' investment costs.
We have also expanded our investment options. As always, we have two investment platforms to choose from: group annuity and net asset value. Our group annuity platform is open architecture, and there are no proprietary fund requirements. Plan sponsors and advisors can request fund additions if they meet certain conditions. Our NAV platform will continue to offer open architecture, access to a wide universe of mutual funds, and collective trust. No proprietary fund requirements there either. And last but not least, we continue to provide disclosure of all plan fees.
Let's talk a little bit about our combined service teams now. So the Standard has been recognized by Plan Sponsor Plan Survey as the #1 provider for plans 25 to 50 million, along with top 6 in the other asset bands. As for NAPA's Advisor Choice Survey, Standard earned top marks in most asset categories for financial calculators, staff credentials, our app, and regulatory support was awarded for all 3 asset bands in the survey. And as for our staff's credentials, you can see that our average tenure for account managers is at 15 years, our relationship managers at 12 years, and our ERISA consultants at 22 years. Not only does the tenure of our staff speak to the experience you will receive at the Standard, but it's written in black and white in our service guarantees listed here. And if these promises are ever not met, the service fee is waived.
Our financial wellness offering resources have also been upgraded through our partnership with Enrich. Enrich is a service offered to all clients and their participants at no cost. It's an easy-to-use platform, no username or password to remember, that uses artificial intelligence to deliver relevant content to participants. It also prompts them to regularly check in on their financial stress rating and overall financial health. 2020 to 2021 stats from overall enriched book of business, not just our BOB, 59% increase in users who built up an emergency savings of at least 3 months' expenses, 35% increase in those reporting on being on track with their goals. Now let's talk a little bit more about our PEP offering with Steve Chappelle.
Hi, I'm Steve Chappelle, Vice President of Distribution at The Standard. PEP Connect is our pooled employer plan offering. For those of you who are not familiar, a pooled employer plan, or PEP, is a retirement vehicle created under the Secure Act to allow multiple unrelated companies to participate in a single plan. And while most believe that the reason to join a pooled plan is to create economic scale, and that's true, the real benefit to the employer is the efficiency gained through the administrative and fiduciary outsourcing to professionals. The Standard takes on the role as the pooled plan provider, which is the plan sponsor of the PEP, providing record-keeping services and a robust investment platform, along with easy-to-access tools and resources through our secure website. Administrative and fiduciary services are seamlessly integrated by the Standard to minimize the adopting employer's involvement while maximizing fiduciary protection. We encourage each participating employer to have a customized plan design that meets their unique needs. Morningstar serves as the ERISA 338 investment manager, taking on full fiduciary responsibility and discretion regarding the selection and monitoring of investments. But we also have the ability to private label a pooled plan for advisors to act as their own 338. The Standard assumes the role as the named ERISA 316 plan administrator and principal fiduciary for the administrative functions of the plan. Adopting employers may have an independent financial professional involved to provide a variety of services, including fee and provider reviews, plan design assistance, and employee education, just to name a few services. A PEP is the first new entity since the creation of ERISA and can create a great discussion point with your clients. We would welcome the opportunity to help you with that conversation. John, back to you.
Thank you for stopping by the RPAG Scoop. Know that you can contact us anytime by emailing partnersupport@standard.com, calling 844-239-3561, or by visiting standard.com/advisor. We look forward to hearing from you.
Investment selection matters. The hypothetical 70-30 illustration shows why. After 40 years of saving, as much as 70% of a retirement account's value could come from returns, not contributions. Let's say someone starts investing 10% of a $40,000 annual income at age 26, then contributes 10% every year for their entire career. Their income increases 3% each year. Assuming a 6% annual return, at year 15, the account would earn about $7,500 in annual returns, but contributions are only $6,000. By year 15, returns would already outpace contributions. At a 6% rate, returns by retirement would make up 70% of the account. In the first 15 years, contributions would outpace returns. By retirement, returns would outpace contributions, with the account's value about $1 million. With an 8% annual return, it's even more. Contributions should work as hard as investors. The 70-30 illustration shows why investment selection matters, and investment quality begins with the manager. For more information about how active managers with a history of beating market indexes may give investor contributions a boost, contact your American Funds representative.